What's happening, guys? We have another Sunday video, this time for the 18th of December, which you have 1 week to prepare for Christmas, and I do not have another Sunday video before Christmas to remind you. So make sure. That's a long time. Most of the time, I know 23rd, 24th is a good shopping day. So anyway, wild week last week. We had CCCC, Alt, ALT. Finally, some big runners that were, not these super small caps, circuit halt, low liquidity, complete crazy trades, but actual real volume, real liquidity, real squeezes, and friendly traders for the most part. Both Alt and CCCC, if you just drew, a simple line, every single time it kind of ramped up and flushed back down. Every single time, draw a line where it flushed to. If it didn't breach, there's no reason to have size. If it did, you have something to risk on. CCCC was fantastic after 750 started to peak. I traded it on the front side a little bit, small, didn't get too aggressive. Backside was a complete home run trade. Now, unfortunately, I didn't do a home run trade on it just because I'm not trading at a ridiculous capacity this year. I'm trying to, as I've said every single Sunday, this year's a little bit different. I'm trying to find that balance and figure out, I've had, 2020, 2021, and 2022, like some crazy years, but, I don't have a system to then compound that, right? So I had done a lot of taking out of the market and putting money into real assets, tangible, real estate, and other kind of investments, because I know that I don't trust myself with having too much in the market. I don't have a system to invest. I don't trust myself enough to build a portfolio and buy the right names. And when the market's pulling back last month or a month and a half ago, I would have never been long biased, and all of a sudden we're at 52-week highs, right? So it doesn't fit with my personality. And as I've said multiple times, it's fine to build a portfolio, but for me, it's just, then something happens, there's earnings, and then I'm there till 8 p.m., and it's just not for me. So I've been trying to trade less and less and less, and I've been trying to, one example, and I've been trying to put some thoughts together for 2024, like a little blog post or something. But one of the biggest things, as I've said multiple times, is, these movers, like PRZO was the start of it. Then we had TPST, we had VVOS. And these are all the cycle beginners, right? They start the cycle. And that's when you show up, right? You show up after those big moves. You don't have to nail that first day move. And one of the biggest things that I've done this year compared to prior years, 2019, 2020, most of 2020 it worked, but then, when I got blasted on AMC or Kodak, things like that, if you're trading the front side of the move, you're really upping your risk. But prior to that, if there was a big stuff move, that's it. And it was great entry and flush down. Now, the number of shorts compared to the longs, there's more aggressive shorts, right? And, that one of the biggest things, the biggest changes, especially 2022 and 23 for me, is if I'm trading the front side of the move, it's small, right? Otherwise, I'm waiting for those levels that I give. I don't care if it runs against me, on a starter size or anything like that. That's the point of a starter size. But for the most part, and as you've seen, I don't even care to try to nail. I wait for it to exhaust out, wait for it to slam back, wait for it to come back, and then I start in, once I have some sort of risk. And that has been a game changer for less headaches this year. It's been a game changer for less, being upside down first before you make. And it also is a good reminder, when you do put those levels in, of what makes a good scale opportunity, right? And so something like CCCC, we talked about the 6 level. I think this was Thursday. 6, and then 640, and then 750. And I didn't even try in the 8s. I was there in the 6s, and like I said, if 640, because that was a line, if it came back to 640 and absorbed, the trade is voided. right? And then you have to wait for the next one. So the next line was 750. And so it goes up to 8, comes back 750, flushes 730, still not a trade for me. Comes back up to 750, exhaust out a few times, and then that's when I start to use 750s as my risk, basically. Not a hard stop, but as long as it doesn't firm up and start to base at 750s, then I will keep that trade. So that was a home run opportunity. It wasn't a home run for me because I'm not getting aggressive this year. I'm not being, super sized up, but I feel like it was one of the best trade opportunities of the quarter anyway. Same thing with alt. But anyway, those are, some of the biggest differences that I've made over this year. So, flash forward to 2024, I will be sharing some of the things that I'll be working on once again. But again, it's really about focusing on that 80 to, where do you make 80 to 90% of your gains? And I would venture to say that it's probably from 10 to 20% of your trades, right? And then meanwhile, we spend 80 to 90% of our time focused on the other 10 to 20%, right? And so the real question you have to ask yourself is that 10 to 20% moving the needle for you? Is it worth it? Does it, if you're 20 something, yeah, maybe it does. But if you're 30 and your kids and you got a spouse and this and that, or 40, you got to weigh those. What is it? Does it move the needle for you or not? Is it worth it or not? And for me, it's not. I'd rather, take a little bit less and have more of the other things that, I can't buy. I can't rebuy. The time that I can't replace. And, that might not be the same answer for everybody, but it's just something that, look, if you're 35, 40, 45, it's something to consider. But anyway, that has been my 2023 and, kind of rebalancing and figuring it out and doing the investments and trying to find more passive and all that kind of stuff. And I'm learning a lot too. I learned a lot from, even guys like Lance and other things with passive investments that they make. And, I think it's important because everybody's always so focused on more. But what if you can take your more and then have it work for you, right? You don't always have to just keep on going, and then you end up at some situation where, you reset. For me, I'm different than somebody like a Lucas. Lucas wants to have all his money in his account. Obviously he's diversified to different things, but he has a compounding strategy. Plus he's 23 or whatever. But, as you get older, or at least for me, I don't want to have to manage my capital every single day in order to make more. I want to be making the money for me. So anyway, these are all things that, each year I've kind of, been having little goals. And so that's many of the changes that I've made this year. And then really a big focus for next year as well. But I wanted to get into CHSN. And CHSN should not be a surprise to anybody. We actually talked about it just last week. I talked about GDHG, I talked about MLGO, and whether or not, if these surprise you, then that's on, you. If CHSN dropping 80% surprised you, that's on you. These are all known. And none of this is I told you so. None of this is like it was an easy trade. No, it's not. And that's why they squeeze. That's why they have these big moves. But what I want to do is just discuss the why this one was a little bit different for me. Why I was interested in it. Why I was in it at the 1540 level. And why what I saw on some people's charts scared me. Because the next ones they're going to get absolutely clobbered on. But most importantly, why this one was different and how it relates to something like RETO, HKIT, GDHG, and MLGO, the ones that I've traded, versus the ones that, I kind of ignore or warn against. And it's always hard to discuss these just because I assume that if you're following me on X/Twitter, or you're in the room, that you've watched Sunday video. I try to pack as much as I can into Sunday video. But the problem is, and for some, it's just so many 20-year-olds that just, need to say their piece or whatever. But just taking things, making assumptions, taking things out of context and all that kind of stuff. it's frustrating because it's very hard to talk about these things without having some sort of know-it-all type of response from people. So if I block you, if I mute you, my apologies. For me, a goal in 2023 was just to not engage with people that are not putting in the work or trying that or more like aggressively making assumptions rather than just hearing and listening. So I'm going to dive into CHSN a little bit, and hopefully it helps those that care. For the vast majority, you shouldn't care. You shouldn't be trading it, and that's something that I say every single week. It's a type of trade that could either make or break you, right? But in my opinion, there are certain signs and certain situations that will get me in the door and focused. Will I trade these things in huge size? Was CHSN the trade of the quarter? Was CHSN the biggest trade that I've made? Absolutely not. I'm not going to trade these with huge size because what if it went into a circuit halt? Right? We wouldn't be having this conversation. It wouldn't have been such a great trade. But it's a home run trade after it's confirmed that it's a liquidation trade. And what are the signs that are leading up into that? And what are things that you can look at from prior moves or prior situations? And how do you kind of align those dots? And so in this case, CHSN, anybody that's been paying attention, we know that Henry had reached out and said, oh, it's a buy at 540 or 560, whatever it was. And what happens is all this volume, on average, it's trading 8,000, 10,000, 15,000 shares a day. Max. There's no volume, right? And so all of a sudden, then they make a trade 5 million shares, and then 8 million shares, 9 million shares. And you decide, well, hey, you know what? I can trade 5,000, 10,000, 20,000 shares. That's fine, because there's 8 million shares traded. Meanwhile, remember, the average trading volume is 5,000, 10,000 shares. So now you're like double, triple the average trading volume on your one position, right? All that volume is more than likely, this is my opinion, fake. In my opinion, it's wash trading, just like Top. If you guys remember, Top, before it went crazy, before it went to the 260 level, we had a big conversation about all of this wash trading right here, all this. And they do the flush, right? Because everybody has identified Top as a potential liquidation trade. So you know what? Yeah, they liquidate it. Slam. Everybody gets short. Yep, they do it again. Slam. Slam. Oh, wait. It held. They do it this day right here. Slam. Right? So they're building this volume, and now you've got an average of 1 million, 1.5 million shares. Everybody feels like it's a very liquid volume type of name. Meanwhile, before that, it's trading 40 to 100,000 shares a day. So now you might be sized in relative to the volume that you've seen, and you feel safe about it. And then when it's liquidation day, they slam it down, and it trades 5 million shares, if you remember that morning. And then it held. And I think it was around 740 or so. I was like, hey, hands off. They're tossing shares back and forth, back and forth, back and forth. And it's holding. No different than the day that I talked about it with ILAG. ILAG, hey guys, huge offers, but the bids are soaking. Take note, right? A liquidation trade doesn't have huge bids soaking, right? After you have that initial, flush, most of the time it goes into a circuit halt, and a circuit halt, and a circuit halt. But if it's absorbing, something's different. And that is exactly what we talked about on ILAG at 420, and at Top at 7, and then again at $14, $15 per share. Midday, there was, somebody had bashed it on Twitter suggesting like an offering was coming, and there was a huge like 50 or 80,000 share offer that came out, but the bid was small, and it just absorbed, right? So if that offer gets pulled, everybody that was using that huge offer as sort of a buffer, a backstop, is going to end up in a bad position. Because they look at this huge offer, they're like, all right, worst case, I'll just take that offer out. That's my stop. Uh-oh, where'd the offer go? Circuit, right? So these are all games. It's gamified tape. So we've dived into this quite a bit. So what then happens is on something like CHSN, right? They had suggested, buying it over here. I think it was 560, like I said, either 540, 560. And so they're ramping it up, slams it down. They fill all those bids. In my opinion, most of those bids were probably them. Not new people, but them, like internal. So now as somebody from the outside, maybe not me because I understand how a lot of this stuff works, but from anybody else, they're like, oh, I should have bought. It's going higher. It's going higher. And then they, feel like they missed out. And it's just like anything else. When TPST goes, the next day everything goes crazy, right? Pre-market. So now CHSN, they're like, oh man, he was right. I'm going to buy the next one. And then he says to sell. So now everybody that is like trying to short these things thinks, well, they're saying to sell, so it must be a short. And then all of a sudden it holds. And if you go back and you look, right over here, they slam it down and they hold. They held that same base, right? And then after that, each time they basically slammed it down, they just soaked it back up again. Every single time. Even here, flushed it down, huge volume, soaked it back up. Until they let it go. Until they knew that they probably owned more shares than they were in the float, right? So if you control the whole float, and all of a sudden you own 1 million more shares than are in the float, you can just run it up and you squeeze everybody out, right? They have that information. We don't. And again, that's my assumption. So in a situation like this, they have fabricated a short squeeze and they've forced everybody into circuits, panic. It's no longer, an obvious short trade. It's like I could blow up and you have to just buy whatever price it is. So for me, I focus on the liquidation trades that have had a fabricated short squeeze. Not ones that just haven't really done much at all. MSS, yeah, you looking back, it would have been a nice short. But for me, it's not enough volume because if I did short this and it went into a circuit halt, it could have been 20 or 25. Same thing with NCL. Same reason I didn't like NCL for a short. Because guess what? This one actually came all the way back up. And you see this right over here. You see this right over here. The reason why CHSN interests me is because we had that fabricated short squeeze. We had the volume. And we had something to risk off of. Whereas the other ones, we don't really have that. This was all a natural kind of progression of a squeeze, right? As it continues to higher and they don't have an exit, it's just going to naturally squeeze everybody out. So now you have like a real market that has formed at the expense of shorts. So it starts to fade off. And, again, now we have some stuff to risk off of versus, another trade that maybe you don't have any history, you don't know how high it could go, such as NCL or an MSS. Now, again, MSS would have worked, but to me, there's not enough information, there's not enough overhead that got squeezed out. Right? So for example, on CHSN, to me, it feels like this was actually some of the liquidation, right? They get people in there, but they can actually sell the vast majority of their stock into that short squeeze. So now when they come back to the table and they say, hey, put in a bid for 1540 or 1550, whatever it was. No, it was 1450 rather. Put in a bid at 1450. Yes, it could have easily just slammed and circuited up into the 17, right? Absolutely. And that is a risk that I'm willing to take. What scares me is most people hammer the 1450s. If you do that each and every single time, you're going to end up in a very, very bad spot. And we've been over this. Same warning I gave on NCL, same warning I gave on MSS. Now, MSS would have worked, but I don't think it was a smart short. I don't. But in this case, CHSN was also the second or third go around, right? So you already had the squeeze out, but then you had the same players, the pumpers, saying, hey, buy, right? And so what happens is you had this move of $5, $6, $7 per share, and then you watch it go to 18 and you feel like you just, missed out on this, right? So Henry makes you feel like you missed out on this huge trade. So most people, mom and pops, will be like, oh, you know what, whatever, the next one I'll buy. And then Henry comes back and says, hey, 1450s, it's going to 22. Why wouldn't you buy, right? And so everybody starts to buy. Now, what I think happens is when they put those bids in, a lot of them are internal, but I think they figure out, okay, how much was outside of our bid team, our bid squad, right? How much was external? And if they liquidate enough, then they're not going to try to squeeze it. But if they don't, then they do. And so anyway, this one went straight down into the circuit. And yeah, I took some off with 12s and 11s, just small, couple hundred shares, and then I covered a couple thousand at the lows. But why? Why wouldn't I just keep it to, all to $1.70? Because you just don't know. You don't know. You don't know if it's going to swipe the other way. We had a similar situation with EJH. But what I want you guys to see is HKD, all very, very similar, right? Where they had these trap days, blow off trap day, and then this was the official day to buy it, right? So CHSN had all these official sort of days to buy it and trap days, and then Friday was the big day. And what they do is they tell you to use all your money. They tell you to that it's going to be a huge, huge, huge trade. It's different than the rest of the days because that's the day that they really want you to buy. So in this case, it was the big pick, right? And same thing with what was the other one? RETO was another one. You can see the same kind of flush comes back, and then it was the really, really big day. So there's this natural squeeze. And the other thing too about CHSN is I feel like there is a couple days where they just let it kind of consolidate, and there's a reason for that. The reason for that is this is a very thin name, right? Away from the main holders. And what happens when a lot of people are short? Potential buy-in, failure to deliver, right? Next day, no. But T+2, so they let it marinate. So then when they ramp it, not only do they have the buy-ins, and the smart ones probably bought in at open, or you've got the VWAP, buyers throughout the day. And that delivers more of a, steady buyer throughout the day and allows them to exit into this basically fabricated squeeze that they created based on the fails. So after you've got all that, the next time they push it, in my opinion, is the exit. Now, will that always be the case? No. Is there high risk? Absolutely. If you notice on MSS, we never really had that liquidation day. Remember, think about it. What is a liquidation? Liquidation is a ton of volume selling a ton of stock. If you don't have an outlier volume day, it's probably not a liquidation day. Now, that is why I was not interested in MSS. Yes, it would have worked, but no, it does not fit into the kind of situation that I'm interested in. MLGO, same kind of deal. And one other thing to kind of consider and think about. Look at this chart. And then look at CHSN. And take out the squeeze. So you can kind of see a position day, a fake out kind of squeeze day, slowly kind of ramps up, then they let all the shorts steadily fade, and then the next day they juice it, right? So MLGO, everybody knows that this is a liquidation trade at some point, right? We all knew that. We talked about it. Everybody knows. So they do this same kind of low day with volume. You can kind of see over here. Then this day fades off, then ramps back up, kind of bid, buy back the float, let shorts win, and then they do the news day. And we had a conversation about this, where it comes down on relatively low volume, and then once it broke back and held over, I think it was 520s and 550s of the imagination level, then they squeeze everybody out, right? So was this an easy trade? No. But you can make better assumptions after it has had a fabricated short squeeze, which then creates a natural market. A natural market that and I guess I'm using that term kind of loosely, natural market meaning now it has a liquid trading market that was created by this short squeeze, right? Now people are going to be buying dips. Now people are interested in it, and it's created this market essentially from a fabricated means. And so that is why also with MLGO, I was interested in, and that is why I traded that. And similarly, you can kind of see the same situation here where front side, and now you have history to use as sort of your risk. And we know that 13 was like a key level, and if you guys remember that 1750 fade, looking left, using some of the prior history to make a better decision. Same thing that we had on CHSN, where we had a prior squeeze out, and then it starts to, have a base, exhaust out into that same level, and same fade off. So again, all of the traders that slammed into 1450, in my opinion, on the next one, you'll get absolutely crushed. These are special situation trades. I rarely trade them. I don't trade them with aggressive size. Yes, I should have. But again, if it went into circuit halts the other way, I'd be happy that I didn't have crazy, crazy size. So anyway, that is the difference between, something like any other liquidation trade that they just pump and, a name like this one. Something that has history, that has created a short squeeze, that, fabricated a short squeeze that then turns it into a real squeeze that creates a real market for a period of time before then they actually liquidate the trade. And that's the difference between that and all the other ones that you probably get your face ripped off on. So keep that in mind, and hopefully that helps. But again, for me, my edge and my opportunity on these is number one, tracking, which, people say, oh, well, they're all going to get crowded and this and that. Most people forget. Most people take them off radar, and the other people will just slam the bid every single time and get murdered. So the key is let that natural squeeze happen. If it has history and it's already had that filled follow through momentum, and it's already had that natural squeeze out from a fabricated trap, they go on my radar. If it hasn't, I avoid. The other thing too to consider is any good rebound, great opportunity. So even over here, it comes down, it opens at like 170 or 270s, ramps back up. These are great opportunities, not only into the rebound as well as the next day, just like WBUY and just like, what was the other one? MLGO, the second day. But you'll also see, stuff like this with WBUY. We talked about this one as well. And it was just sort of a fabricated short squeeze that they created on the daily, right? So they churn, and ramp up into a circuit halt, and then all the way back down. So anyway, let's get into Sunday video. As always, what's next. I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you're not okay with that, shut the video off. If you are good with that, then let's go forward. Not too much. I mean, honestly, it's every single day. It's just been kind of come to the market. Let's see what's going on and react from there. So next week, AAOI. I feel like 2160s is sort of a key level. That is sort of the level that was the base this day. If you look back, you can kind of see that once that triggered, it flushed. That was a nice trade that I made. And now at this point, I'd be watching that 2060s versus this daily VWAP level and see how that trade pans out. Alt continues to squeeze. The key levels that I gave last week was 720 and 750. Now, I do think that if these trigger, that we could be looking at like a 650 to 680 sort of flush. But both of which, 720s we know was a key level for weeks now. And that's just from trading it and knowing that, it's had, a little bit of trouble in that direction. both from a resistance standpoint, but also on the days that it was running, that was sort of the base. But in this case, 720s was a level that I was interested in. It ended up basing, so that voids that thought process. And then the next level was 750s, and obviously it consolidated, never stayed heavy, and also did not breach VWAP, right? So, what are simple signs that can help you stay out of trouble? A situation like alt, draw those lines, 720s, 750s, and ask yourself, are we over VWAP? If you're scaling into a trade and it's over VWAP, you're asking for trouble. Wait for 720s. Next level, wait for 750s. Same sort of solution on this CCCC trade, where I had given the 640s and then the 750s. Nice mean revert type trade. And then again, if you go back to where basically the support lines were, over here you can see where they based it that day. Use that information to help you with the entry. And you guys saw the reactive trade that I made into that move. And again, we'll see what happens. But ideally, some sort of 520, 550 push, and then a fade off from there would be ideal. I don't know. I mean, we could see 380s to 4 on this thing, and we could also see 6s. It's a difficult one, but it's got volume, it's got range. You don't need to figure it out today. Come to the market, get prepared, plot your spots, and wait for that action to come in. Did I know that this was going to happen on Friday? No. Did I react to the move? Absolutely. And that was not from me getting prepared from the night before. It's just from putting a simple line on your chart. You have a spot to start in. If I'm wrong and it starts to firm up over that, voids the trade. Take it off. If it stays, then you've got a good trade. It rejected at VWAP, started to fade off from there. Next up is the failed follow through momentum, NKLA. Higher the better. Right now, if it were to gap up, I'd be watching it maybe versus the mid 90s level. But personally, I'd rather just kind of wait for this thing to push out. It's got a lot of good volume. I'd love to see it go, a buck 20 and then fade off. We'll see what happens. GETR, I'd be watching any good pops for possible gap fill back into the mid to low 20s. MYO, I want to keep an eye on it. It has been going straight up, and every single time I pull it up on scan, it's like a buck higher. So we'll see what happens, but watch for it to blow off. I put price alerts at 5, 520, 550. If it goes to 6, I'll put them at 580. Just so it stays on watch. Next up, continuation side of things. IMPP, watch dips there, potential gap fill. ICCT as another one, which has a big history of moves. So, sometimes people are like, it's never going to do that again. I'm going to fade it back. And all of a sudden it's like, whoa, how did it get to 3 or 4? So what I'd be watching is potential liquidity trap setting up, watch dips over the next day or two. And then come Wednesday or so, if it starts to ramp up and get back over those 170, 180s, that's when I want to be paying attention because we have that potential liquidity trap set up. But that's about it. I've got some other stocks on it. If you click the blog post, you can see, there's a couple other, charts that are definitely worth seeing. CDIO and VC or VRCA was a fantastic opportunity on Friday. Just being patient for that blow off move and then kind of revert back to where the squeeze started. That was fantastic. Standard failed follow through setup. You guys saw my trade on that one, I'm sure. But you've got this blow off move. You're waiting flush. Don't chase a red candle. You've got the dip and rip right over here, and then it comes back. The only way that a dip and rip is basically exhausted is when it goes back, retests, and slams back down. And then you had nice failed follow through setup and away from failed to follow through away from there. And then you can see that it kind of just faded back to the prior level. It's sort of like a mean revert. You can see that the squeeze pretty much trapped here, squeezed out, came back and retested back to that level. So in my eyes, if I'm going to trade this, I would need to see it basically under VWAP versus red to green for risk, or I need to see it kind of exhaust 640 to 680 range, 690 range, right? So I either need to see it rip here fast and exhaust out, or it needs to stay under these two levels. Otherwise, if you're trading in between these levels, you're asking for it. But a couple others, just ones that I have on watch for later. NKLA has been actually straight up since this big day. But CVNA has been running. There's a lot of good stuff going on right now. A lot of thin moves. Be cautious. But that's about it. So have a good week. Be patient. Wait for opportunities. Again, if you didn't open with Centerpoint, you guys saw with our partnership with Centerpoint, no commissions. The rest of the year, no commissions the first quarter. So if you've been debating opening, if you are thinking of opening, the link is in the description. But that is a very, very special deal. They've never done it before. And as always, we try to get the best, twist their arms to get the best opportunity for traders that are on the fence. So reach out if you have any questions. Leave a key takeaway in the comment section and have a great day.